I hope they do. I hope we're not live streaming.
Yeah.
Yep.
Oh, okay. Yeah.
Should we start?
I just want to see if everyone's ready for live stream.
Do you guys have there we go. There we go. Then I guess away we go.
All right. Welcome. Welcome, everyone. Well, it's a wonderful day. We're about a week in, and I think we know that food systems are a critical tool to solve our climate challenge, deal with equity, nature. And so I'm so happy today to be introducing a fantastic panel of leaders on how to use the tool of public markets to shift operations of food companies to transform our food systems. And so it's my great pleasure. I'm Amy Christensen. I founded the Sun Valley Forum on Resilience in Sun Valley, Idaho. I'm Christensen Global consulting firm. Been working on climate for 3 decades. And I started in energy and transitioned recently in the last 6 years to food because of the power of food systems. And so um, Elizabeth Alfano, the founder and CEO of Eat V, among other things, Force of Nature with a fantastic podcast. Glenn Hurwitz, founder of Mighty Earth. If you all know food systems, you know the critical role they've been playing to really put pressure on shifting and revealing the impacts of our food system. Sophia Condes. Sophia is head of investor outreach at FAIR. And if you know food systems, you know FAIR and the power you all have been, the role you've been playing to mobilize significant capital into this space. So thank you. And our moderator, Sylvain Rolls, is the head of investor outreach at UN. Can I get your title wrong? Senior specialist on nature. Senior specialist on nature. Sorry, from the UN Principles for Responsible Investing. And of course, UNPRI mobilizes and supports action by leading investors all over the world. So please join me in welcoming this fantastic panel on a really critical topic today. And thank you. Thank you very much, Amy, and hello, everyone. So yes, indeed, I'm from the PRI, the Principles for Responsible Investment, and with a signatory base of over 5,000 signatories, the idea of driving responsible capital is a key priority for us, which is why I'm delighted to moderate this panel today to discuss around driving capital towards sustainable food systems. So jumping right in, we have this idea that it is a core fiduciary duty for investors to ensure long-term value creation. But the idea of risk to the end returns for clients has really shifted in the last couple of years. And so if we look at the food sector in particular, to each of you, what are the risks that investors should assess and act on as a result? Maybe if we start with Sophia.
Thank you, Sylvain, and great to be here today. So, well, that question around the risks that lie at the heart of the food sector is really core to the work that FAIR has been doing since our inception. So, when FAIR was launched about 7 years ago, we were launched to try to fill in the knowledge gap that existed around environmental, social, and governance risks in the food sector for investors. And when you look at the food sector, there's really many lenses that one could take. It's so complex. But when we started with understanding kind of what is the gap that we want to fill, we realized that animal agriculture, especially intensive animal farming, really had an exponential link to some of this environmental and social risks that are important for an ESG agenda. So we took that focus of looking at the whole protein value chain. And what are some of the risks there? So, in terms of the contribution of the sector towards some of those environmental priorities that are being discussed at COP28 this week, emissions, the first one to start with. If you look, for example, I mean, the food sector as a whole contributes to a third of emissions, but intensive animal farming contributes 14% of emissions. That's more than the whole transport sector, which few people know that, right? There's so much focus on, for example, energy and transport, really important sectors. But I mean, livestock, 14%, that's a huge amount of emissions. Then, number one driver of biodiversity loss, deforestation. So, in terms of the nature side, those risks are very clear from a reputational standpoint, from a regulatory standpoint. So, investors are becoming much more aware of that. But I think also if you take a double materiality lens, this is a sector that is at the front line of climate change. So, for example, we launched a tool called the Climate Risk Tool at FAIR for our investors to understand how climate change will impact animal agriculture. And that tool really kind of did a scenario analysis of the 40 largest livestock and dairy companies in the sector and looking at, okay, if climate change is going in business as usual, or if climate change goes beyond like 2 degree scenario, what will happen to these companies that need water, that need feed, that are really exposed? Their animals are facing drought, are facing heat stress. About 50% of the largest companies would actually face losses unless they change business as usual. So that's really kind of like when you look at that number, is like, how are you actually going to continue as an investor putting money in the sector if the sector continues with business as usual? It's just going to face those risks that are really material. It's going to have a really big financial impact on those companies. So you can look at it from kind of a morality standpoint, but from a materiality standpoint, those risks are definitely there.
Thank you very much. Glenn?
Yeah, well, I think you covered the gamut of risks really well. So maybe what I'll talk about is some of the action that's being taken. So I think particularly amongst institutional investors, we've seen dramatically growing attention to food systems. We've also seen it to a more limited extent from banks. And institutional investors for, I think, a longer period have been attuned to these risks. They've also been, at times, effective advocates to urge companies to improve policies to fight deforestation, more recently to tackle methane pollution, and in some cases to set alternative protein goals that can dramatically reduce the footprint of the protein that we consume. I think I was really encouraged over the past year. We and a few other organizations did a report looking at JBS, which is the largest emitter of greenhouse gases in the meat industry. It's the largest driver of deforestation. We have a big campaign to try and change them, and not only just to change their direct impact, but because they're the market leader. What we found in industry after industry is when the market leader changes, it's much easier to drive broader change within the industry. And so we looked at who their biggest financiers were. Barclays Bank came out on top. We put out a report about that, and the links between their financing, which was quite, I think, over $5 billion, and what JBS was doing, how that provided them access to capital markets. The good news was, we had shared this report with Barclays in advance. Immediately before the release of the report, they announced they would no longer finance beef companies engaged in deforestation. So that's just one example of how we are seeing greater sensitivity, sometimes under pressure, but nonetheless still action. We have to make sure, in Barclays' case and others, that they're still implementing it. Finally, I would say, to me, the area that we need a lot more action is building momentum for alternative proteins. So, I think when you look at the numbers, you're seeing at a minimum 80% lower land use, up to 99% lower greenhouse gas emissions, water use from plant-based and other alternative proteins. And that has truly transformative potential. We could free up lots of land for restoration that could suck gigatons of carbon out of the atmosphere, could provide habitat for endangered wildlife all over the world, and allow indigenous communities actually to resume some of their traditional production activity. I think I have not seen sufficient pressure from institutional investors, from banks, to say to meat companies, to retailers and others, boost alternative protein goals, sell them at the same price. There's no reason we should be selling, especially plant-based protein, at the same price as industrial meat, and otherwise be investing in the sector so that they can scale with very modest goals. I mean, we hope that you can get to 10% alternative protein by 2030. It's actually quite aspirational and a reach goal, but getting there could allow the industry to scale and achieve that full potential that we're hoping for.
Thank you. Yeah. So material risk, not just for investors, for banks as well, and really for the whole financial sector.
Yeah.
Elizabeth, anything more on risk for the financial sector?
Yes, I'd just like to say I'm so happy to be here and to be on this panel with Glenn and Sophia. Really amazing. And thank you for the work that you do. What we try to do with the EAT ETF, so that's the financial tool that VegTech Invest puts out, is we try to take the work of FAIR and also of Mighty Earth and pick up where they leave off. So if one of the reasons investors perhaps might divest from animal proteins, but then don't know what else to do. If divesting is the stick, if you will, we try to be the carrot. So we give them the financial tool for if you're divesting from meat because animal factories putting out 32% of the world's global methane emissions. I don't know how one impacts climate change if you don't impact that number. That's animal factories. So you might divest from animal proteins, but then where do you invest to get returns, to have growth potential, to have impact, and to lower the carbon footprint of your own investment portfolio? So if Fair and Glenn and Mighty Earth and Fair are arriving with the stick, if you will, we try to be the carrot, maybe even the cherry on top. And so we're trying to give them the incentive to put their money into the innovations that are actually replacing animal proteins for a sustainable food system. So we have tools that can help investors, institutional and retail. Retail does play a big role here. They have a voice and they have their fingers on social media. And they do pressure their registered investment advisors to have more sustainable portfolios, to not have their money in certain places, and still have a retirement plan where they can grow and partake in a novel system. So we do give tools not just for the investing in a new system, but also to measure how you can reduce your carbon footprint of your own investment portfolio. And retailers are very excited by that.
Thank you. Maybe actually building on that in that case, in terms of looking at both retail and institutional investors, for them to contribute to the collective efforts to address our planetary crisis, what do you see as necessary? And are there any particular projects that you are working on to ensure this amongst the one that you've already mentioned? Maybe Elizabeth, if we start with you.
Sure. I wonder how the clicker works. And I give this clicker to you to find out if you can click down to maybe it's this one. Ah, yes. Okay. Thank you. So we find we have a tool, ACA Global, which is a large financial organization that focuses on compliance. They have an umbrella under organization called Ethos ESG. They're a third-party certifier. They looked at the EAT-V ETF, and the EAT-V ETF has more than 35 global companies that are innovating to replace animal proteins. So the positive impact investment, not just the ESG screen out, but positive replacement. They looked at the whole of those 37 companies and they said, your global temperature warming potential of EAT-V is 1.18 degrees centigrade, well below the Paris Accords of 1.5, which no one really believes we're going to maintain at this point. They looked at the S&P 500 index, probably the most ubiquitous investment out there that everyone's in at some perspective. They have a global temperature warming potential of 3.87 degrees Celsius. So this is a very tangible way for retail and institutional investors to understand how investing in alternative proteins can help to lower the global temperature warming potential and indeed their own footprint of their portfolio. So I think you're seeing institutional investors start to say, I'm going to put at least 20%. This is what I'm seeing. Institutional investors having goals. I'm going to have at least 20% of my clients in sustainable. This might be alternative proteins, green energy, electric vehicles, alternative building materials, at least 20%. And now I'm seeing talks of 50%. I see Concordia University out of Canada wanting to put all of their endowment into biodiversity protection. So we're starting to see this conversation take place. And I believe it is because of the retail investor who's saying, I do not want to participate in burning down the planet. And that, of course, is the question. How do we feed the world without frying the planet?
Thank you. Sophia, do you also see this trend and any work that you are doing in particular at FAIR to contribute to it?
Yeah, I mean, I think I definitely see the trend of some of these tools that are kind of make it digest the information for investors to know how they can actually think about capital allocation when it comes to the food sector and more broadly, and what that means in terms of warming potential. So that's really helpful. We've also seen at FAIR that there's kind of two areas of work where that I want to mention that are relevant. So first, the importance of benchmarking tools. So kind of related to what Elizabeth just touched on, for them to understand like who are the leaders and the laggards in the space. But also, I think the role that peer pressure can play. I think a lot of the competitors. I mean, as you were saying, Glenn, when you kind of show a light on the practices of JBS. I mean, JBS has also tons of Brazilian peers, right? So I think if you can push a little bit of like a competition for better practices within peer groups, that's a relevant way to work on. But I think that also another big trend that we're seeing within our investor network that has about 400 institutional investors as part of it is the importance of united climate work with other areas. So not tackling climate on a silo. And what we're working on a lot now is, for example, areas of work projects that are uniting climate and biodiversity. So, for example, looking into what is the potential of regenerative agriculture. I mean, the buzzword I think of the year in food and ag, at least 2023. But if it would live up to its potential, has also the potential to kind of preserve biodiversity, sequester carbon. So looking at how do we digest what companies are doing on regenerative agriculture, what are viable practices, what are actually how do we digest the information that is coming out from companies that is not just talk but also action? Are we seeing relevant metrics? Are we actually seeing financing going to helping the supply chain of farmers achieve those goals? So all of that work that is uniting climate and biodiversity or climate and health, I think that's where investors are really focused on, and that's why we're trying to focus on any work that we're doing now that touches on climate cannot look at climate on a silo. Like we need to make sure that it's touching on other goals that are also a priority and that are essential for climate as well. Kind of they feed on each other, right? If we lose biodiversity, I mean, there will be a worse climate catastrophe. If we continue having lots of antibiotics into our soil and disrupting the carbon sequestration potential of microbes in the soil, then it will be worse. So it's kind of like we see this more as like systemic issues that feed each other, and that's why we've been spending most of our attention on issues that are kind of climate and nature and climate and health.
Thank you. Glenn, you've already touched upon the work you've been doing on JBS. Any other kind of projects you would like to talk about in terms of really helping those investors drive their impact and contribute to our global efforts?
Sure, absolutely. I did just want to comment on what Elizabeth was saying and is doing, because I think this alternative protein ETF is an idea whose time has come. As I've learned more about it, their Boston Consulting Group came out with a study showing that investment in alternative proteins, it has the single largest climate impact by far of any type of investment. So the second and third place were cement and steel decarbonization, but they were significantly behind. I think that speaks to the broader power of nature as a climate solution when it comes to tackling deforestation, when it comes to smashing methane pollution. This is what has great potential, and the good thing is alternative proteins get it all. It's not in the short term. We have to do other things too, like the low-hanging fruit of stopping deforestation and shifting to regenerative agriculture, but we do need to scale this. In terms of our initiatives, I mean, to echo what Sophia was saying, I think we really are trying to drive industry-wide change. So, I often say our work is like an iceberg where you see the 10% that's above the water, but there's 90% going on underneath. And so we do try to create that race to the top. So, JBS, as the largest company in the meat industry, is, certainly target one because they have the power to set emissions. We are actually seeing not perfection, but improvements from some of their rivals, especially in the Brazilian cattle industry when it comes to tackling deforestation in the Amazon, from Marfrig, from Minerva. There's more I would say they're not perfect. There's more to be done on driving traceability, but we are seeing some new investments, some new commitments, including here at COP, especially in terms of tracking cattle better. So, they're not doing cattle laundering where they're taking these animals from a farm that had recent deforestation to one that had long ago deforestation. I will share, I mean, we had a very exciting breakthrough just a few days ago. We have had a long-term campaign to get the soy animal feed industry to stop deforestation and destruction of other native ecosystems. And the big blocker in that has been Cargill, which is the largest agribusiness in the world. And what we saw was actually investors played a big role with ADM, with Bunge, with their rivals in improving those companies' policies to say that they're not going to do any deforestation conversion by 2025. That, along with the campaign activity, helped finally pressure Cargill to more or less make a similar commitment. Although, being Cargill, they were somewhat incoherent and left out Bolivia, Paraguay, and Colombia, which are countries where there's deforestation. So we still have something to work on there. But I think it is an example of how actually a lot of investor advocacy. I will give a shout out to our friends at Green Century Capital Management who do a great job and work with a lot. I think they work with FAIR. They work with a lot of other institutional investors and sort of, do this strategy because they're owned by environmental groups. So they get the advocacy part. They've among others have been doing excellent advocacy, and that helped create this race to the top that even brought in Cargill, which is a privately held company and not subject to investor pressure. So it's kind of a bank shot effect that's, I think, had quite significant breakthrough in driving a major long-awaited conservation priority.
Thank you. And absolutely, I mean, stewardship is a key priority for many investor networks, including the PRI. I'd be remiss not to mention that the PRI has launched its new stewardship initiative for nature called Spring, which has a focus on deforestation in key geographies, and particularly wants to engage companies not only on their business operations, their supply chain, but also their responsible political engagements, their lobbying and other political influencers, acknowledging that they have a part to play to ensure change at the system level, just like investors do. But maybe building more onto this topic of the companies that are not yet aligned with the Paris Agreement, the Goal Biodiversity Framework, or the Sustainable Development Goals, what else can be done with them in order to address those strategy gaps, let's say? Maybe if we start with you, Elizabeth.
Sure. Can I just riff off of what Glenn said for a
Absolutely.
minute, and then I'll come to that? So, Boston Consulting Group, it's the numbers, if I'm remembering correctly, are 3 times to 40 times more impactful at lowering greenhouse gases by investing in alternative proteins than, say, other green technologies such as alternative building materials, electric vehicles, and alternative energy. And the reason for this primarily is because the CapEx spending needed to build out that infrastructure is so much less than the other sectors. You can get there faster, so you can have faster impact. This is why what Boston Consulting Group is predicting, which is about 10% alternative, 11% actually alternative proteins by give or take 2035. Of course, Mighty Earth is more aggressive. Go Mighty Earth. They're not alone. Bloomberg Intelligence is saying the same thing, and they're saying about 10 or 11% by 2032. So this is the realm that it's not just advocates and folks like ourselves, but it's mainstream Boston Consulting Group that, to my knowledge, isn't here at COP, but just looking straight at the numbers and doing the data. So I think that's very interesting. So how do we move the needle and get those that perhaps don't have the understanding that we have here on this panel? I'll go first, but really I want to say here we build off of the great work of FAIR. So FAIR really encouraging investors to divest. I'll let Sophia really talk about that. But where they have shareholder engagement around meat companies, we try to do shareholder engagement around those companies that are already in the plant-based space, but could do more. So you look at a company like Kellogg's or something, for example, they have Morningstar. They understand the financial benefits, the distribution channels that are already up and running. Maybe we could encourage them to do more replacement. So where FAIR has their shareholder engagements, we kind of pick up where they leave off and really push those already in some plant-based proteins, alternative proteins, to go further, farther, sooner. And if you're interested in this, you can go to the QR code. That'll take you to the mobile site. This just launched about 10 minutes ago. I kid you not. So please sign up. We're looking for support there. And if by chance you'd rather go to the computer link and not the mobile link, then you can use that link there and you can sign on as an individual or as an organization and help encourage those companies that are in alternative proteins but could do more, get there faster.
Maybe Sophia, if you want to talk more about the work from FAIR with those companies then.
Yeah, and thank you, Elizabeth, for the shout out. So, yeah, I mean, I think FAIR has been working on protein diversification since we first launched. So 6 years ago, we started our first engagement looking at the 25 biggest manufacturers and retailers in the world. So names like Walmart, like Unilever, like Nestle, and asking them how they were including protein diversification as a key part of their climate strategy. And year one, most companies were like, "What?
Hmm.
Protein diversification, alternative protein? Like, what do you mean? Like, I don't think we have time for this conversation. We're still working on climate." And it was like, "This is about climate." So that was the first year. But then by year five, we had all of the companies that were recognizing protein diversification in their sustainability strategies. So already big progress there. We also had about 65% of the companies that had that through that dialogue between a large group of institutional investors as their shareholders, bringing them to the table, had put out actually transition plans and specific targets of how much alternative proteins they were going to see either in their marketing plans, in their shelves, or even some of the work that manufacturers were doing on developing newer and better types of alternative proteins to sell. So definitely lots of progress can be done through that shareholder voice. And I think that testament, we called it the Sustainable Proteins Engagement, is a testament to that. I think that what we realized is that there was still a lot of work again to be done around making sure that when companies are looking at alternative proteins, they're also looking at better substitutes. So it's not just about climate. Again, you also need to think about the health aspect of those products. You have to think about the nature aspect of those products to make sure that it becomes, again, more of a holistic vision for how to make sure that you're putting products out there that also have a broader value. So a lot of our latest conversations with companies as part of that engagement are around how are you making sure that some of those plant-based proteins are as minimally processed as possible. That also you're fortifying them with micronutrients. So again, so the conversation has really advanced. So from not really thinking about alternative proteins and protein diversification at all to actually seeing that companies have that as a central plan and it's part of their core strategy. And I think that's very important because once a company recognizes that this needs to be kind of mid long term strategy and then they need time bound targets. So it's not just that, like, yeah, we'll do work. It's like time bound targets. What percentage of your sales will come from that? Then it kind of like it's set in stone and they have to follow that plan.
Thank you. Glenn, anything to add in terms of what other work is needed with those organizations that might be still misaligned?
I mean, certainly for us, we need to scale these campaigns. I mean, I think the good news is when we first started working to transform the meat industry, we were probably the main international advocacy organization doing it. We've had a lot of great allies in this, but especially when we started, it was relatively lonely. And we had like a budget of $300,000 a year to change this $1 trillion a year industry. What we've seen is that when there is advocacy campaigns at scale, it can really spur change. I talked about the breakthrough we've had with Cargill and the rest of the animal feed industry recently. It's also worth saying just to talk about areas where that kind of success is more mature. In the palm oil industry, in the rubber industry, in the pulp and paper industry, campaigns spurred the companies primarily not with to lead the charge that have succeeded in driving down deforestation 90% across all those three industries. It's a gigaton scale climate win. I think it seemed unimaginable, to change these industries in developing countries with high levels of corruption and poor governance. And yet the market is incredibly powerful. What we did there with allies is set the expectation that if you engage in deforestation or land grabbing, you will within 48 hours lose access to your customers and lose access to global capital markets. So the good news is we have been able to scale the work. There's some more partners involved in the effort to transform the meat industry from an advocacy perspective. It probably would benefit from being 10 times as big. We could get much faster progress. As excited as I am about what happened with Cargill and the other companies, I actually think that if we had scale, we could have got there 5 or even more years ago,
Mhm.
so that we can bring more focused pressure. And so, I am cautiously hopeful that we'll continue to see progress in driving reductions in deforestation in the meat industry, which is low hanging fruit. But the reality is, when you're talking about the meat industry or broader food systems, we need much deeper changes. Like tackling methane pollution is one of the things that can get us to 1.5 degrees, that can actually hold on to that target. We'd like to also restore the ecosystems that have been destroyed. In addition to alternates, there's many degraded lands. We need to push to get companies to invest in that, to get governments to scale their investment in nature. So I think a significant part of the puzzle is creating that market demand, creating the mechanisms to show investors, banks, the meat and food companies themselves that this is in their financial best interest, and that requires some scale.
Thank you. And so maybe on that topic of needing deeper change, we're at COP28, negotiations are happening in other rooms. What role do you see for investors when it comes to adopting and implementing regulatory frameworks or policies? Sophia, if you want to start.
Yeah, I mean, I think that's a really key question, right? I mean, you know very well at the PRI, there's a lot of that investors can do as shareholders through their lending practices. But at one point, investors can't do everything on their own if the policy environment, if the regulatory environment is not playing in their favor. So I think that there's been increasing recognition that investors also have a voice to use when it comes to trying to influence the enabling environment to make sure that it's there in a supportive way. And we've seen much more attention from investors around, for example, their macro stewardship practices. And I think that's why also we have so many investors that are now coming to this type of forums, which wasn't the case if you would look at it, let's say 5-7 years ago. So what we see is that those frameworks that are kind of coming together from the angle of policymaking have to also be fit for purpose for investors. So, for example, we had been advocating for the need for agri-food systems roadmap. Investors kept telling us, listen, for the energy industry, we have the roadmap that was published by the International Energy Agency, but we don't have something similar that is neutral for the food sector. So we actually put together an investor statement that many of our members signed. We had 18 trillion in support of assets behind that statement, directed to the Food and Agriculture Organization, asking the Food and Agriculture Organization to put out an agri-food roadmap of how to make sure that we keep to 1.5 degrees, but while also reaching nature and nutrition security goals. And through that voice of investors, the FAO committed to developing that roadmap. And the roadmap will be unveiled later this week. So that's a very concrete example of the influence that investors can have to make sure that the enabling environment is as enabling as possible and not working against them, because there's still definitely a lot of work to be done around not only the regulatory framework, but also enforcement. I mean, sometimes we see even in deforestation, I mean, laws are put into place in Brazil, but is enforcement really there? Are we dedicating resources to enforcement? So I think there will be more work, for example, to do on sovereign engagement in Brazil. We see a lot of appetite for that type of work. But even like, let's not go even as to Brazil as the only example. Even in the UK, where FAIR is based, we've kept seeing like lots of work around like water pollution. The regulatory framework is right, there's no enforcement, and investors are increasingly willing to use their voice to kind of push for more enforcement. So lots of work to be done there, and I think we're seeing some of that encouraging work here at COP28.
Thank you, Glenn. I can see you nodding. Do you also see a role for investors at COP28 or more broadly with the regulatory landscape?
I think one of the most important roles for investors and other players in the private sector is to be advocates for better policy, right? So, we've just had a big push on the EU deforestation regulation to ban imports related to deforestation. I think there's a lot of other, important similar efforts from Inflation Reduction Act in the United States to broader food system transformation being considered in Europe, and a variety of initiatives in Brazil and elsewhere. The investor voice, financial sector voice can be very persuasive. And it can be persuasive for good or ill. So, we certainly have seen pushback in the UK and in Europe to including the financial sector in bans on imports linked to deforestation or financing of deforestation. That's been a real point of tension, particularly in the UK. So that's a negative example of where they're lobbying. I think the positive example is where they're saying, for instance, on cocoa, where there hasn't been much progress in fighting deforestation, we have seen institutional investors step up and say, these companies aren't doing enough by themselves. We need strong regulation to come in and require them to do so. And that's quite constructive and solution oriented. I think when it comes to broader food systems, the reality is most institutional investors, I don't think, have a super sophisticated understanding of how to influence policy. So they need to team up with advocates and others to get that. I think some of them want to, because they are an influential and different voice.
Thank you. Elizabeth?
I would love to add to this. I am an optimist by nature, but I can't help but be extremely inspired by this COP. When I look at the major stakeholders in shifting the food system, I see that for different reasons, they all want the same thing at the same time. So you have governments around the world now focused more on food insecurity, as well as who's going to own the IP of food. So let's call it a national security, if you will, around food, as we see wars breaking out and disrupting food supply chains. So governments are starting to spend. You're also seeing companies through the work of like Mighty Earth and others take note of maybe they're going to have more diversified proteins, or they're going to avoid the stick and not want to be penalized through deforestation, et cetera. So the industry stakeholders are starting to change. And you see the financial community coming online at this COP. The buzzword that I keep hearing is finance food fast. Last year, we couldn't even get people to talk about food. We've skipped talking about food, and we've moved right on to how quickly can we change the food system. So I'm hearing a lot about how are we going to scale finance so that we can scale alternative proteins. You really can't scale alternative proteins until you scale the financing behind that. So I'm very encouraged that, and then the consumer, which is already on board for not only personal health, but planetary health. So all these stakeholders want the same thing at the same time. So I'm very encouraged that things are moving quickly, dare I say. Look at the state of California, which has just put into law through Governor Newsom that any company, public or private, that's $1 billion in revenue or more must disclose scopes 1, 2, and 3. Now, by disclosing scope 3, where 85% of the emissions are, you're going to really force industry, and the meat sector will be heavily impacted by this. You're going to really force change because I don't think that they're going to be uncovered. Costs that used to be externalized to the taxpayer are now going to be put back onto the balance sheet of the industries that have otherwise in the past just kind of put them under the rug. So I see a lot of things happening at the same time. It's very exciting.
Very, very much. Very well. Thank you. As a final question, could I have some words from you on what kind of tangible impact can be had, or have you already witnessed when it comes to moving capital towards sustainable food systems? Elizabeth, I'll start with you this time.
Well, sure. So the tangible impact that we've seen is that it used to be, this is maybe anecdotal, but it's meaningful for me. When we started the EAT ETF 2 years ago, we started the ETF, and I think the markets fell apart that day. And it's been a very tough time in the economy for the last 2 years, as probably everyone here knows. I used to have to explain to people that the investors, institutional investors, that the food system was going to transform and that there was enormous opportunity for wealth creation herein. We don't have wealth creation because a company has 3% more revenue one year. We have wealth creation because we go from the horse and buggy to the car. That's real cataclysmic wealth creation, if you will. No one could listen to that. Now, 2 years in, people are coming to me and asking for the tool of EATV to put in their portfolio because they want exposure to food systems transformation or the opportunity, the upside, financially speaking. So I am seeing what I used to have to chase. I'm seeing people come to me. So that's my again, optimistic perspective.
Thank you. Glenn, optimistic as well?
I think I am optimistic. I think I want it to go faster. So we are seeing progress. We're seeing progress in fighting deforestation. I think we're very much just getting started on what should be a near-term opportunity of tackling methane pollution. Uh, I I think my great concern is we're in a race against time. So there are good initiatives. There's a lot of positive work, and yet the question is always, is it fast enough? I think investors can play a key role in pushing for near-term timelines and implementation plans, and not just vague commitments. For us, when we are asking companies to change, the indicator for us of whether they're serious and whether there's more on paper is, do they have a credible implementation partner and do they have a timeline? So that is the key question. It can't just be announcements and positive vibes. We really need action plans and we need deployment. And I think across the board, the other thing I'd caution against is just viewing technology as a silver bullet here. And research. I think research and technology is great, but the things that are going to change is like changing the market and changing the pressure on the companies and actors. What we try to do is get the companies themselves and governments to be the ones investing in research and technology and leveraging philanthropic capital into really high impact catalytic changes. So I think if we and our movement are able to do that and prioritize it, I think then what that does is it actually creates opportunities for investors to come in at much greater scale, and we can see things like the plant-based ETF, really take off at a totally different level of scale. Because once you create those market signals, I think investors will come in behind that.
Thank you. Sophia?
So I'm with you, Glenn. I'm optimistic, but cautiously optimistic, and getting a bit impatient because I think that there's progress, but like we are facing a planetary crisis, so we need to really see more urgency. So on the progress side, I think one metric that isn't perfect, but I think is as close as we get to like looking at climate and nature is Scope 3 emissions. That we are looking at very closely, because if you can't disclose your Scope 3 emissions, it means you don't understand your supply chain. And if you don't understand your supply chain, you really cannot exert the change that you want to see if you're a food company. So the work that I've mentioned earlier, we've been doing with manufacturers and retailers. From those 25 companies, we saw close to 70% of those companies have an SBTI approved Scope 3 target. So that's really encouraging. We really pushed them to make that happen, and that was the voice of investors that got them in the right direction. And on average, that SBTI approved target was of 30% reduction in their emissions on Scope 3. So very encouraging work. But where I would love to again see more urgent work is, for example, on deforestation. We have all the data. I cannot have another conversation where there's complaints around data. Like, we've had data on deforestation for such a long time. It's so obvious. Like, we know exactly where it's happening. We just need to really put more effort into tackling that. And where I would also love to see more progress is on lending practices, because we're seeing like there's so much we can do through the shareholder side, but a lot of like the work that Glenn and his team has been doing has shown that a lot of the funding is going through the lending side. So we cannot really change the system unless we put more pressure on lending practices, and that's an area we want to pay more close attention to in the coming months.
I'd love to see, riffing off of what Sophia said, I'd love to see lending. I don't want to oversimplify, and perhaps Sophia can join in if I've got this wrong, but I'd like to see lending. If you currently lend against accounts receivable and you say, well, I see that you're going to have money coming in, so I can give you debt off of this. I'd like to see, we're trying to work on this in VegTech, it'll take some time, but I'd like to see lending say, I see that you're going to reduce your cost of goods sold and shorten your supply chain in your food. Therefore, you're going to have better profit margin. So I'll lend against that. I'd like to see some forward-looking lending, and I don't know if that's too novel for the system, but I'm hoping for things like this. I'd also like to say, again, riffing off of FAIR, in this protein diversification, shareholder engagement, we recommend the GFI Good Food Institute and FAIR framework for understanding your scopes 1, 2, and 3 if you're a food company and how to do that. So if you are a food company and you'd like the benefit of reducing your carbon footprint and shortening your cost of goods sold, lessening your cost of goods sold, there is a framework in place from FAIR and the Good Food Institute to be able to start to do that so you can know your numbers.
Thank you. Well, thank you very much for this discussion. We've managed to cover the sticks and carrots that are needed to transform our food systems. We've talked about the need to diversify your portfolio, not only as an investor, but also as companies when it comes to alternative proteins, to advocate for better policy, and really picking up on Elizabeth's quote earlier of financing sustainable food fast, that sense of urgency that came from all three of you. So if I can ask everyone to please thank our wonderful panel for their contribution.
And thank you to Sylvain, really, thank you.
Thank you.